You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, let us commence operations again here for Education Wednesday. That means it is time once again for the premier options education program. It is time for Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network, reminding you folks, of course, if you like a little more in your ear holes these days, and hey, who doesn't? Maybe you want to get access to some, exclusive programming, and perhaps, would you like to consider perhaps a little bit of, let's say, pro Q&As, or perhaps options oddities, where we break down all the madness in the world of unusual options activity. I love seeing folks sending in their own suggestions for what we could talk about there on the usual activity front. That always brings a smile to my face. Of course, if you want to get access to this show, anything else we do throughout the week, many shows coming at you live throughout the week. So whatever your schedule allows, you're more than able to join those, ask questions, get bumped to the top of the line. And of course, great giveaways. We're already coming up on the July box. It's crazy. So get your name in the hat now. TheOptionsInsider.com/pro is the place to go. Or for all you cool cats out there, /secret club. And let's see who's joining us in the Cool Cat Club today. Let's go out first to the on-demand side. Let's see who's leaving us a nice Cool Cat 5-star review. This week it is, I like this handle, Da Meatball. The Meatball. Makes me want a meatball sub now. Thanks to Meatball. I'm not even that hungry. We're recording a little bit earlier today on Education Wednesday. Not usually a meatball sub for breakfast kind of guy, but your handle is making me reconsider that. The Meatball says 5 stars. Thanks, guys. You are the best. And F the rest. Got a little bit dark towards the end there. And a little rhyming, too. I like the rhyme scheme, if nothing else. Thank you for the love there, Da Meatball. I know who's joining me to bask in that love is the black-hatted one himself, Mr. Dan Passarelli, from what the cool kids call Mr. Matt Passarelli, welcome back to the program. A, and B, are you joining me in a nice breakfast meatball sub courtesy of Da Meatball?
Oh, man, I could go for a meatball sub, but no, I had my typical 2 eggs. It's my pretty standard breakfast, and I'm ready to go, man. Let's do this thing.
All right, fine. Be boring with your eggs and no meatball sub for breakfast. Fine. As we keep on rolling right on into the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, welcome to the mail block. You can tell we're still in the Southern studio, listeners. One more week in the Southern studio here. Then we're back to the big honker back in the northern studio. Of course, it is mail call time. That means it's time for you folks to join us on the old All-Star panel. Your questions, your comments, your wit, your wisdom. Let's start you off. Let's ease you into the questions a little bit, folks, because we'll start off by paying off a question that we asked you folks last week. We asked you guys last week, we've seen a nice pop in equities and crypto over the past week. Are you buying back in at these levels, or is there still more blood to come? Dun, dun, dun. And we gave you 4 choices. I'm buying equities here, I'm buying crypto here, I'm buying both here, or there's more blood coming. And unfortunately, Mr. Dan, permabull that you are, nearly 2/3 of our audience, 62.3%, said there's more blood to come, followed by 16.4%. There are some bulls. They are fewer and farther between, but there are out there saying you're buying equities here. 13.1% said you were buying both crypto and equities here. And only 8.2% said they were buying crypto. So, Dan, does that surprise you? Nearly 2/3 of our audience saying there's more blood to come, sir. Watch out.
No, I mean, it doesn't surprise me. I mean, what I said last week, and I'll kind of paraphrase it and tighten it up a little bit. I mean, personally, I think the answer could be both, right? Because he who tries to buy the absolute bottom F's up. I mean, you're never going to buy the absolute bottom. You're never going to sell the absolute top. So, I mean, unless you believe that there's just like massive amounts of more blood coming, it's okay to scale in if you've been largely out, But, you always want to keep a little bit of powder dry just in case, too.
Keeping that powder dry. Well, let's get to this week's question of the week. Then we'll get to your questions, listeners. Let's get out first to... where we go? Okay, here we go. So our question this week. It is Fed week after all, listeners. So the Fed is back this week, sending traders into a tizzy about interest rates. And no, we're not going to ask you about road. Don't worry. Instead, we said, but if you had to buy a SPY at the money call or an at the money put, at the time we posted this, S&P was flirting with 4,000. It was like 39.70. We said expiring at the end of this week, which way would you go? Gave you 3 choices. SPY put, so you want to fade this rally. SPY call, so you're fully in the rally ho mode. Or you're buying a straddle, you're getting greedy. You want to pay twice as much, because why not? Mr. Dan, what are your thoughts, and what do you think our audience is going for?
I would hope that the audience is... I've been trading a fair amount of straddles lately, and they're tough, I always say that. But when you can pick your spots and find them and go in with the right frame of mind where you should expect to lose on more straddles than win, but, the winners should be bigger than the losers, that's a nice answer. I like that. But, you just have to be really, really cautious and approach it very, cautiously, I guess.
Caution is the order of the day when you are talking about straddles, definitely. Let's see. You know what, Dan? Doesn't surprise me that this one lines up almost perfectly with our, if I can get my poll back up. Let's go. There we go. Yes, it lines up almost exactly with our poll from last week, where almost 2/3 of our audience was bearish. This week, Dan, 62.8% said you're buying that SPY put, you're fading this rally just this week. 32.6% said rally ho, so you're buying that SPY call. Dan, unfortunately for you, only 4.7% said they're greedy, they're buying a straddle. What are your thoughts, sir? Once again, our audience, nearly 2/3 lean into the dark side, sir.
Yeah, no, I mean, hey, man, it's a little hard not to, and I can see the not buying straddles because they are tough, especially when the VIX is like permanently above 23 here. So, yeah, I mean, I'm not terribly surprised by this. I'm definitely not going to go against the grain here.
Dan never wanted to go against the grain. Well, let's see if his question of the week goes against the grain. Dan, when you're not talking to me, you're talking to all your students and mentees over there at MTM, and they're throwing questions at you. They're peppering you with questions left, right, and center. Which one percolated to the top this week? Which one resonated with you want to share with our audience, sir?
Someone was asking me about trading iron condors for earnings trades, and that one I'm not a major fan of. Iron Condors, there's some logic to it because the front volatility gets really pumped up, but there's no hedge. It's sort of an all or none. And so I like to take it just one iteration. I mean, it's a little bit more sophisticated of a trade, but and I like to keep them as simple as possible, but it just ends up better usually with time spreads. Time spreads, you've got that natural head. You're not just saying, hey, vol's too high, I'm going to sell it, because you never really know that answer. But with the time spread, you're buying a cheap vol and selling a high vol, and like you can see the disparity there. Like that is a trade that has a genuine edge to it, which of course is why that's sort of at the heart of our earnings trade system here at Market Taker.
Iron Condors. We were just talking about Iron Condors on our question of the week. It won our poll from a couple of weeks ago, which kind of surprised me. We even talked about, I think, on this show, I kind of thought that Iron Condors, and maybe haven't seen their day, they'll always be around, but they certainly there was quite the fervor for Iron Condors. And I never really understood why. They were the big thing about like a decade ago. In the early days of the Options Insider Network listeners, Iron Condors were all the rage. You saw a bunch of people out there hawking Iron Condor services. They were the panacea for all your trading ills. And these days, you don't see them as much for a variety of reasons, even though you think in an environment where commissions are certainly a lot less than they were a decade ago. It's a trade like an Iron Condor with 4 legs. It's a little bit easier to pull off. But intriguing stuff nonetheless, Mr. Dan. Let's get out to your questions. Let's go out first to Justin. Justin F. says, why do people think that selling puts is riskier than just working a buy order in a stock? Doesn't the put premium offset that somewhat? And to the second part of your question, yeah, you're getting paid for your risk now. So first off, that is a benefit to selling puts versus just working your own limit buy order. And we've all seen over the past couple of years tremendous moves in the market in both directions. We saw the massive sell-offs. We've seen the massive rallies. So we know the market can move. So when you're working orders in either direction, there is risk. You should be compensated for that. And at least for selling a put, you are getting a little bit of reward for that, as opposed to just putting your buy order in XYZ stock. And if you get hit, you do. If you don't, you don't. And there's no reward for that whatsoever. So you're right. That does help offset some of that risk. But there are other issues or perhaps things that spook people when you sell puts versus a stock. Mr. Dan, what are your thoughts here for Mr. Justin F.? He wants to know, why do people think that selling puts is riskier than just working a buy order in a stock, sir?
It's frame of mind, which is the answer to a lot of trading issues. Trading is very psychological. And people see, you can look at it from a certain way where it's like, oh, I have unlimited loss potential, or pretty much unlimited loss potential, substantial loss potential, I think is what they say in the textbooks, and a small limited profit potential. And when you think about it that way, it sounds terrible, but the fact of the matter is I don't trade them that way, where you're just trying to steal a few dimes and taking all that risk. That's a terrible idea. But if you approach it mentally like an investor, where it is basically a limit order, and you legit want to get filled on it, then it can be a brilliant thing. It can be like extremely strategic.
Yeah, I'm definitely a fan of selling the put and getting that premium. I think you should be doing that more often than not, rather than just working stock orders. I think the one thing people tend to focus on, Dan, in terms of risk for a put, is that gap scenario. The gap risk that comes from selling a put versus working an equity buy order. If you're fortunate with an equity buy order and the stock gaps down, let's say in the overnight, some substantial news comes out, they pre-announce bad earnings, whatever the case may be, the CEO dies, who knows? Then you're hopefully, if it works out, you're probably going to get filled at that price around where it opens. So that's a little bit better price for you. Whereas the put, once you sell the put at that strike, you're kind of there at that strike. If there is an aggressive gap down where the market is closed, you can't really do much against it. That's the one scenario people usually throw up as being perhaps the question mark to selling puts. Is that your question mark scenario as well, Dan?
And hey, don't get me wrong, like that's going to happen sometimes, but like, look, here's the alternative. If you are approaching it as an investor and you're wanting to get filled, like as soon as you sell that put, you should you should feel that you own the stock. It's like you're buying the stock that day, just at a lower price. And so like if you own a stock and you find out that the CFO is cooking the books or whatever, and the stock falls, you're like, oh man, that sucks. But, hey, this was an investment and, maybe in the long run, I'm going to hold on to it or whatever. Like you have to change your frame of mind. You have to change the way you're thinking about that trade altogether. Otherwise you're not going to trade it well. Like you're going to make those mistakes that come from acting out of fear and greed and panic and frustration and anger, instead of keeping a level head and playing it as a strategy. This is why we call them option strategies.
They are indeed strategies. Let's go out to the live. We love all of our live folks. You always get bumped to the top of the list when you have questions. Options Queen has a question for you, Dan. She says, is Dan still rating right now? And does he do it more often during earnings season or less? So kind of a twofer on your rating. She wants to know, are you still rating? And do you raid more often or less during earnings season, sir?
I am still rating, but truth be told, I do it less during earnings season because so that I can focus on my earnings trades. Like yesterday, I had some like 11 earnings trades on, and the mornings end up being really busy taking them off. The afternoons end up being really busy putting them on, and frankly, there's just not a lot of time to look at anything else.
So it's more of a time thing than a lack of opportunity thing.
Yeah. Oh, yeah, exactly. Definitely more of a time thing than anything. That and, I'm actually coming up with a whole new service that kind of, I was talking to one of our new folks here at Market Taker, new employee, if you will, who described this new thing that we're going to roll out in about a month as sort of like a portfolio hedge to options rate. Options rate or short squeeze trades. Like if you're doing it right, you'll have fewer winners and more losers, but the winners will be bigger than the losers, Whereas this other thing we're working on is going to be a very high probability scenario where it just naturally is going to deliver a much higher percentage of winners, so we can be more consistent. So I'm really looking forward to that. Next couple of weeks, I'll be telling you more about it.
Look at you with more systems in place. I know some people like to curtail their trading around earnings season just because it's a wild and wacky time, right? But you got your other system going, so you don't want competing systems, is what you're saying out there, sir.
Yeah, well, exactly. Because especially this week and next week for earnings is just so massively busy. And like the last 2 days, I put on more earnings trades in the last 2 days than any other 2 days of earnings trading ever. Like there's just a lot more stuff that meets our criteria in our total earnings domination system. And it's interesting that that's the case. So yeah. So I basically, to close the loop and answer that question better, I don't mind competing trading systems. I like to think of each strategy as its own sort of asset in a portfolio. Let's have some high probability trades, credit spread type things. Let's have some high flyer trades, options rater trades, and let's have some earnings trades where we're just taking advantage of the opportunities right here, right now. But yeah, it does come down to a time constraint and focusing on the things that work best.
All right, well, there you go, Options Queen. Let's go back to some of our questions here. Let's go back to short puts, actually, with Nikolai. Nikolai wants to know, I've heard it said that short puts are the same thing as covered calls. Am I crazy, but I just don't see it? What are they talking about? One makes money when the stock drops, and one makes money when the stock rallies. What am I missing? OBC dudes. I like that. OBC dudes. Okay. We're the OBC dudes, Dan. This is one of my favorite questions when I used to do a lot of, live in-person stuff. And you throw it out to the audience. You say, hey, who here likes to sell covered calls? And usually you get, 3/4 of the hands going up. They all like that. They love it. They think it's a great passive, almost income trade. Then you say, who here likes to sell puts? And most of those hands go down. Maybe a quarter of the hands stay up. And then you say, ha, and you show them why they are risk equivalent trades. So yeah, that's a fun one. I know, Dan, you like to do something similar as well. What do you have to say here for Nikolai? He's confused. He doesn't get it. Why are short puts the same thing as covered calls, sir?
And so this is another thing where it's the way you think about it. When you use the same strike, they're the same thing, and that's held together by the glue that is put call parity. And that's sort of why some people think of them as very different, because you're typically not thinking of the same strike. You're typically looking at the out of the monies either way. So a higher strike with the call and a lower strike with the put. But when you use the same strike, like put call parity ensures that they literally are the same thing. And another thing that makes it hard for some people to wrap their head around is the timing of the payments, I guess is the best way to put it. With covered calls, you own the stock. The money has been spent and redeemed for this asset that is the stock. And the margin is put into the call that you've sold. So you've got that. You own that stock now. Whereas with cash secured puts, okay, not just selling puts, but cash secured puts, the money's not out there. You don't literally own the stock, but if you think in your brain that you do own the stock, it makes it a lot easier to see that. And we have actually got an ebook bundle, okay, that we have on our website, and there's an excerpt from my book on put call parity there, and I think we offer it for like $9.97 or something. So that's going to be way cheaper and less time consuming than buying my book, Trading Option Greeks. But this is an excerpt from it. If you want to get that, and it's less than $10. It's just danpassarelli.com/bundle. And I know my name's hard to spell, DAN. So yeah, no, I'm just kidding. PASSARELLI. You got the two double S's and the double L's.
All this time I thought you were DON.
Yeah, I know. It's a Midwest accent, I guess. So yeah, danpassarelli.com/bundle. And it's less than $10. And one of the ebooks there is an excerpt from my book, Trading Option Greeks, on put call parity. And it's I'm not just going to say it's a good read. It's an essential read. Understanding put call parity is essential if you want to be great at this game.
Yes, it's one of the lessons we have beaten into our head when we walk onto the trading floor. The early days of put call parity, which gets us actually, strangely enough, back to our live and to Option God, who has an interesting question along those lines. Option God wants to know, do Mark and Dan ever think there will be a golden age of floor trading again? And would they go back down there if that was the case? It's funny you should mention that, Option Guy. We were just kind of joking about this. I think it was on VolViews last week. It was myself. It was Matt Amberson from Orats, and it was the Rock Lobster. All three of us former market makers, and they were kind of pining wistfully for the good old days of market making and floor trading, in particular the Rock Lobster. It seems like he misses it a great deal. Myself, a little bit less so. I like talking to you folks. So there's a reason why I've been doing this for the better part of the last decade and change. The notion of being surrounded by large, sweaty, sometimes gaseous men doesn't fill me with excitement. That said, in your hypothetical scenario, we have this massive renaissance. We have seen a few few trading floors come online in recent years. Haven't exactly been doing gangbusters volume, but let's say in your scenario, bam, old school SIBO days are back. SIBO is right down the freaking street from our studio now. I could walk there, which is nice. And it's back to the old days, thousands of guys down there and gals. People are competing for seat leases. Seat leases are suddenly have value again. Would I dive back? I don't know. The notion of breaking into a pit now seems a lot less tenable. The notion of me sleeping over, let's say, in the lobby of the SIBO, which I did back in the day to break into Intel in the height of the go-go, mad, insane late 90s, early 2000s explosion that was kind of the golden days of options trading. The notion of doing that again, yeah, probably not. It doesn't enthuse me. But, if there was a scenario where, I could get in there and it would make sense, and it was something where there was stuff was trading and there was, let's say, two-sided paper. Again, that's another reason myself and a lot of people left. There was one-sided paper. You had to split it with everybody. All you were doing was trying to compete with other exchanges. You weren't really making markets as an individual trader anymore. You were trying to take down enough paper so the order wouldn't go away to the Philly or any other exchange out there. That kind of stuff doesn't resonate to me. If there wasn't, all the old PFOF and all the massive citadels and everything weren't gobbling up all the great flow and paying for it and leaving the dregs for everybody else. If you're in your hypothetical scenario, if all those things reversed themselves and suddenly there was actual money to be made doing this on a regular basis again, I might entertain the notion. I don't think I would go racing. I think the Rock Lobster probably would. Matt, I don't know. He likes his little compound up there in the hinterland of New Hampshire. So I don't know about him. Mr. Dan, what about you, sir? In our option god scenario here, where there's a golden age of floor trading again. Well, first off, do you ever think I didn't answer the first part of his question. Do I ever think there will be again? Probably not, option god. But Dan, what is your answer to the first part of his question? And the second part of his question, would you go back down there if there was, sir?
Well, I think there probably won't be a golden age. I mean, there is a use case for it, which is why, like we saw the box, just to call one of those exchanges out, open, like the box they started out as an electronic exchange and they launched a physical trading floor. The SIBO just opened up their brand new trading floor. So there still is a use case for it to make trading better, to facilitate trading better. And I'll tell you what, man, I was one of the initial haters of going electronic. I see now in hindsight a lot of the benefit of that. But, I think you can possibly get better fills. It can be a better situation in some cases for the retail trader. So I don't know. I don't know. I don't think there'll be a golden age, but I don't think they're going to go away ever, probably. And as much as I loved being a floor trader, I don't know. It's kind of a young man's game, to be honest. And nobody likes to admit to themselves or anybody else that, you start changing a little bit with age, but it is a young man's game, and I don't know.
The prospect of sleeping on the floor of the new SIBO doesn't excite you, Dan?
Not very much, no.
Yes, there are certain things that you have to be willing to do in that environment that I'm not sure I would be willing to undertake anymore. But intriguing hypothetical there, option god. I like it. All right. Let's go out here. We'll get you out of here, listeners, on this one. I like this handle. I got good handles this week. Antonius sounds like a philosopher or ancient Roman emperor coming at us. Antonius wants to know, how important do you feel the second-order Greeks are to incoming options traders? Should we spend time learning about them? Well, you're going to hear, once you start digging into your options trading, things about, Vanna and Charm, and we have discussed them on this very program. So if you are new, and I know, hey, a lot of you are new, you've joined in the last couple of years or the last year or the last 3 to 6 months even, a lot of you. So maybe you haven't had time to go back into the archives, not just of our full network, but just of this program. If you haven't gone back to episode 1, I know a lot of you have. It was our most popular episode on the network last year, and a very busy year was episode 1 of Options Bootcamp. So I know a lot of you are doing this. But if you have not, if you started episode 1, you will get through there. If you just scroll through the titles, you don't even need to listen to all of them. You could see there are multiple episodes on second-order Greek. So I encourage you, Antonius, and everybody else, to start there, because they are great starting points. But that said, if you're just coming in, you're a newcomer, maybe you're nibbling at a one lot of calls or you're selling a one lot of puts, In that kind of scenario, I think you have other things you could focus on first before you really need to start worrying about second-order Greeks. It's like people asking us all the time about row right now. Do I need to worry about row? Rates are going up. Then you say, what do you trade? And you say, oh, I sell weekly calls. And the answer is probably no. You're never really going to need to learn or need to know about row. So second-order Greeks kind of fall into that same scenario. But that said, once you get a little bit more established, start learning about trading, maybe you scale up your trading a little bit more, you get more advanced strategies, more advanced products, then things like Vanna and Charm could certainly impact you, and maybe you wouldn't even be aware of it. So it's a good thing to certainly be knowledgeable about. But you're one-lot guy coming in, just starting out, not a priority in your education. Dan, you wrote the book on the Greeks. What do you have to say for Antonius wants to know how important are second-order Greeks to incoming options traders?
Let's not forget that gamma is a second-order Greek, which is very important. But I kind of remind our students that it's important. It's very important to understand the concept of gamma, because when you're long options, it always works in your favor. When you're short options, it always works against you. But I don't believe that it's necessary to look at the exact value for gamma or for any of the second-order Greeks. When I do our Trade Smart workshop on the Greeks or talk about it in any of our live in-person classes or anything, I have a slide on each of the Greeks. When I talk about delta, I say, hey, when the stock goes up, your call delta gets bigger and your put delta gets smaller, and that's gamma. But I do that for the other ones too. I don't call out the names of the second-order Greeks, but, hey, as time passes, your at-the-money theta gets bigger. That's a second-order Greek, but we don't need to know the name of it. We just need to know that concept. As the stock goes higher or lower, your vega and your theta get they change. They're biggest at the money and they're smallest in or out of the money. So, the concepts are extremely important, but getting down to the nitty gritty and doing the math and all that is that just sort of gets lost in the weeds. You don't need to get that granular with it.
That's a good point about good old gamma. We always throw it out there. It is one of the most discussed Greeks. We don't often put it in the category of a second order Greek, but at the end of the day, listeners, you are measuring the rate of change of another Greek with gamma, hence it is a second-order Greek. It's also probably why so many people, especially new option traders, have a hard time coming to grips with gamma. They can understand delta, they can understand vega, they can even understand theta, but when you get to gamma, people's minds tend to explode. So that's probably why the second-order Greeks are usually a little bit of an intimidating topic. So yeah, good question, Antonius. I love your handle, by the way. Great handles, great questions this week. You guys all brought it as usual. That is going to do it for this episode of Options Bootcamp this week. Brian's coming at you live to tape tomorrow, so Education Wednesday is going to be spread out over 2 days today. So you get double dose of Education Wednesday and a smattering of Education Thursday. How's that sound? But Mr. Dan, if they want more education in their lives between episodes of Options Bootcamp, where should they go? What should they do?
Make your way on over to markettaker.com because that's where we live on the World Wide Web. And we're always glad to help bootcamp listeners. And in fact, you can get a free account with us. Right now, we're actually even offering the chat room for free, which is really great. And, a lot of times people who are looking for one-on-one coaching because they really want to dial in and work with the Market Taker team, they fill out our assessment, which is down in the footer of markettaker.com. And so, yeah, we invite you to do that if that's something that you think can help move you forward fast.
There you go. MarketTaker.com is the place to go. We got to get on out of here. Back again tomorrow. Like I said, Brian will be coming at you on the on-demand side of the network. So if you're just listening to Bootcamp, you just subscribe to Bootcamp listeners, what the heck you doing? You got to subscribe to the full network. At the very least, you need to subscribe to OPR as well. It is very much a sister program to this one. Will take you down the educational rabbit hole in a lot of fun ways. Also has some fun, actionable trading ideas, which is always fun. Then, of course, tomorrow, double dose of This Week in Futures Options and episode 2 of the Option Block Friday. It's a freaking palooza for all of you pro listeners out there. We've got Vol Views at noon. Then coming after that, we've got Options Oddities. With myself, we'll have Saad from Vesica, Shift Search creator, joining us to break down some unusual activity scan. Probably the Rock Lobster diving into the fray as well. And then after that, if that's not enough, you're going to get a pro Q&A with Mr. Saad. So a lot of great stuff. So if you have questions about unusual activity, how to find it, what to do with it, what you find it, all kinds of fun stuff, start getting those in now. And if you haven't joined the pro, what are you waiting for? TheOptionsinsider.com/pro. That is going to do it for us today. And then we're back again next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.